Welcome to this new series where I am going to review undervalued small cap companies, which is in my opinion where a lot of money can be made in the stock market. The company I am going to review today is currently trading at 3 times earnings and it has a dividend yield over 7%. The company's name is Global Ship Lease. They are currently trading at a 52-week high and they just reported earnings. They own containers and they lease these containers to large transporters such as Maersk, Zim, MEC, Hapag-Lloyd, etc. They make their revenue through contracts, and they currently have 2.5 years of remaining contract cover. Even though shipping rates are very volatile, and this is a very cyclical industry, their earnings have been very solid. They've generated $192 million in revenue and $93 million in net income, which is a profit margin of 48%. They've also paid down some debt and paid dividends. They are on track to making $10 per share for the year. They have seen good revenue growth over the past decade, growing from $164 million to $752 million today. Profit has also seen good growth, with net income going from negative $28 million to positive $406 million. One downside though is that their free cash flow has been decreasing in the past couple of years. However, I expect it to recover. Then, in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. As you can see, the intrinsic value according to my low assumptions is $34 per share, middle $54, and high $81. And because the stock is currently trading at $34 per share, this means that if my low assumptions occur, you would get a 10% annual return on your money, middle 21%, and high 30.5%. These returns include the dividend. Why? Because dividends come from free cash flow or profit, so you cannot double count them. Now, as far as my assumptions, I assume the company grows revenue between 2 and 6% over the next 7 years. They average a profit margin and free cash flow margin between 20 and 30%. And I assign the PM price to free cash flow at the end of the 7 years of 5, 7, and 9. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. They also have an okay balance sheet with $489 million in cash and $725 in debt. And as I said before, they have been paying down this debt, mentioned in their earnings as the de-risking of the balance sheet. Now, there are a few reasons why the stock is cheap. First of all, nobody wants to own a shipping company. It's a very cyclical sector. There is also a few number of ships that are coming onto the market, which increases the supply and thus lower rates. This is known as the order book. However, GSL ships are small to mid-sized ships, where the order book is lower, although still meaningful. There is also a lot of uncertainty about tariffs, which actually could be a positive, as smaller and mid-sized ships become more flexible. But still, tariffs make trade worse and ships do shorter trips. As risk is that when their contracts expire, they are going to have to renegotiate charter rates, and it's very hard to predict where those are going to be in the future. But again, this is a company that is trading for 3 times earnings, and their contracts are covered for 2.5 years. The market cap is only $1.3 billion, which means there is still a lot of upside potential. Lastly, if you want a discount on stockanalysis.com, the best site I found for stock data, grab my code in the description. Also, let me know if you enjoyed this type of video where I bring in companies that are not very known. I think they are very interesting as value investors. I hope you found this video valuable. Let me know what you think about this company in the comments, and I'll see you in the next one.